Hi there. If you earn extra income online, understanding HMRC reporting requirements is crucial to avoid compliance issues.
So, let me ask you something. Did you happen to sell a few bits and pieces on Vinted last year? Maybe you rent out a room on Airbnb or do some driving for Uber on the weekends. Okay, now what if I told you that by 2026, HMRC will automatically know about every single pound you made from those platforms? Well, welcome to this explainer from Pro Tax Accountant, where we break down the complex UK tax rules that affect your business. Today, we are tackling one of the biggest and quietest shifts in UK tax ever, the crucial new disclosure rules for online side hustles. And honestly, if you have one, this is an explainer you really can't afford to miss.
Let's kick things off with a number that it sets the scene perfectly. £55 billion. Nope, that's not some government department's budget. That is the colossal value of online sales data that platforms, we're talking eBay, Vinted, Airbnb, Etsy, were legally required to report directly to HMRC for the 2025 calendar year. Just think about that. This isn't just a bunch of numbers. It's a digital treasure map, and it leads HMRC straight to the income of millions of people just like you. So here's the first question you need to ask yourself, and be honest. Is your side hustle income part of that $55 billion? Because look, whether you're selling handmade crafts, secondhand clothes, or your skills as a freelancer, the days of that income flying under the radar they're officially over. It's not just that HMRC has the data now, they've got powerful new systems ready to analyze it, cross-reference it, and you guessed it, act on it. Right, so over the next few minutes, here's what we're going to cover. We'll look at exactly how the rules have changed and why. We'll pinpoint who's affected, clearing up some of the biggest points of confusion out there. We're going to give you a practical compliance checklist, highlight the common mistakes that could cost you thousands, break down the brand new, much harsher penalty system, and finally, show you how to get it all right, for complete peace of mind. Okay, let's dive right in. The single biggest change is this. Since January 2024, new international rules, they're known as the OECD rules, legally force digital platforms to automatically report their sellers' data right to HMRC. This isn't a choice for them, it's a legal must, and this isn't just some UK thing. It's part of a global push for tax transparency, which makes this a complete and, believe me, irreversible game changer for how taxes are enforced. And this just lays out the new reality perfectly. Every time you make a sale, it's logged. Simple. At the end of the year, the platform bundles up your total sales data and sends it straight to the taxman. But the really crucial part? It's step 4. HMRC has this super sophisticated computer system called Connect, and it automatically compares what the platform says you earned against what you've actually declared on your tax return. Any mismatch, any little discrepancy at all gets flagged. Instantly. There is now a direct digital line from your online shop right to HMRC's desk. Now, what's really fascinating here is the sheer scale and speed of this change. The value of reported data more than doubled in just 1 year, from an already massive £25.5 billion to £55 billion. And that data covers nearly 4 million UK sellers. Oh, and did you know HMRC's Connect system can process 1 billion pieces of data in a single day? They're not just hoarding this information, they've invested a fortune in the tech to use it. This isn't a warning shot anymore, it's the start of a huge data-driven crackdown on the hidden economy. So this brings us to a really crucial point we need to nail down. Who exactly do these rules apply to? And this is where we get to the most critical, most important, and honestly, the most widely misunderstood part of this whole thing. It's the huge difference between the reporting trigger for the platforms and the actual tax threshold for you. Getting this wrong is the quickest way to land yourself a penalty. Let's be absolutely crystal clear on this, because this is the detail that trips so many people up. The platforms like Etsy are forced to send your data to HMRC if you make over 30 sales or earn more than about £1,700. Lots of people see this and think, great, I'm under that, so I'm fine. That is a costly mistake. That number is just an administrative trigger for the platform. It has absolutely nothing to do with whether you owe tax. Your legal duty, the one that applies to you as an individual, to register and declare your income, that kicks in if your total gross trading income from all, and I mean all of your side hustles combined, goes over just £1,000 in a tax year.
This £1,000 limit is what's known as your trading allowance. And look, it's a great tax break, but it comes with a really common trap. It is a single £1,000 allowance for you, the person. It's not $1,000 per platform or $1,000 per side hustle. For example, let's say you earn £600 selling clothes on Vinted and £500 walking dogs for your neighbors. Neither of those is over £1,000 on its own, right? But together, your total is £1,100. you are over the threshold and you now have a legal duty to declare that entire amount to HMRC.
Of course, all of this really hinges on one question. Are you actually trading? So how on earth do you know? Well, HMRC doesn't have a single, neat definition. Instead, they use a test called the badges of trade. It looks at a bunch of different things, like, is your main intention here to make a profit? How often are you selling stuff? Are you buying items specifically to sell them on? Think about it like this. If you're just clearing out your own unwanted clothes from the attic, that's usually not trading. But if you're going to car boot sales to buy vintage items, fix them up, and resell them online for a profit, yeah, that is almost certainly trading.
Okay, so we get the new rules, we get who they affect. Now for the really important bit, what you actually need to do. Let's walk through a clear, simple checklist to keep you on the right side of HMRC and give you that confidence that you're totally compliant.
Here it is, your 4-step action plan. Step 1, using those badges of trade. Be really honest with yourself. Are you trading? Step 2, add up your gross income. That's before any expenses from every single source. Vinted, Etsy, Deliveroo, your craft market stall, everything. Step 3, if that grand total is over £1,000 in a tax year, you must register for self-assessment. The deadline for that is the 5th of October after the end of that tax year. And step 4, and this is no longer a nice to have, keep meticulous digital records of every single sale and every business expense.
And here's a professional tip from us here at Pro Tax Accountant. Don't just stick with a spreadsheet. You need to start using Making Tax Digital or MTD compatible software. Things like Xero or QuickBooks, right from day one. In this new, super data-driven world, having solid digital records isn't just a good idea. It's your main line of defense. It's absolutely essential for proving your income, claiming every expense you're entitled to, and ultimately steering clear of those costly penalties. All right, let's talk about the risks again, because HMRC's new data is going to automatically and very easily expose the most common and costly mistakes that people with side hustles make. So let's look at these traps so you can sidestep them completely.
Here are the top 5 traps we see all the time. First, ignoring those nudge letters. If you get one of these, it means HMRC already has your data and is basically giving you a polite chance to declare it before things get serious. Second, as we've said, forgetting to add up all your income streams. Third, wrongly assuming you're safe under that $1,700 platform trigger. It's not a safety net. Fourth, missing that critical 5th of October registration deadline. That's an automatic penalty. And here's a big one for any influencers or creators out there, not declaring gifted items. If a brand gives you something and you post with #ad or #gifted, HMRC sees that as a payment, and its cash value counts towards your $1,000 allowance.
Now, what if you do get it wrong? Well, the consequences are more severe than they've ever been. The old penalty system is gone. It's been replaced with a new points-based system that is designed to be much stricter, much faster, and a whole lot more expensive if you don't comply. Let's break it down. Just look at how serious these changes are. Under the old system, you had a relatively generous 30-day grace period to pay your tax or sort out a payment plan. Under the new 2026 regime, that's been slashed in half, just 15 days. On day 16, if you haven't paid or made an arrangement, boom, an immediate 3% penalty hits you. By day 31, another 3% gets added on, plus a daily penalty starts building up at a rate of 10% a year. Let's just walk through that. Imagine you owe £2,000 in tax. The very day you miss the deadline, interest starts ticking up at the current rate of 7.75%. Then, on day 16, if you haven't acted, bam, an instant £60 penalty. On day 31, another £60 gets slapped on, and then the daily penalty kicks in. The costs just spiral incredibly quickly. The message from HMRC is loud and clear. Burying your head in the sand is no longer a viable financial strategy. So, after all that, how do you actually get this right and get that all-important peace of mind? Let's quickly recap the key actions and lay out the definitive path to getting fully compliant in this tricky new landscape. Here's your final action plan. Number 1, review. Go back and check your sales figures for past years and do it now. 2, disclose. If you find some undeclared income, use HMRC's official digital disclosure service to come forward. Trust me, penalties are always lower if you volunteer the information rather than waiting for them to find you. 3, record. Get your digital records sorted today. Don't wait until the deadline is staring you in the face. And 4, advise. If you have any doubt whatsoever, please seek professional advice. Getting it wrong is now just too costly to risk. And here is one final really high-value tip for you. I call this the golden rule of side hustle finance. Open a separate bank account just for your business. And every single time you make a sale, immediately transfer 25% of that money into a different savings account. That's your tax pot. Psychologically, you never even see it as your money to spend. It makes sure you're never caught out by an unexpected bill and that your tax money is always there, ring-fenced and ready to go.
Okay, now it's really important for us to say this. This content is for informational purposes only. It does not constitute financial or tax advice. Everybody's situation is different, so we really do strongly recommend that you consult with a qualified professional for advice that is tailored to your specific circumstances. Look, navigating these new rules can feel really complex and, frankly, a bit overwhelming, but you absolutely do not have to figure it all out alone. If you need expert advice on registering for self-assessment, making a disclosure, or even just getting your records in order, please get in touch with us here at ProTax Accountant. Our details are on the screen for you now, and for more essential updates just like this one, make sure you subscribe to our YouTube channel. So we'll leave you with this final thought. HMRC has your data. They know what you're earning. The only question left is, are you prepared for what comes next? Thanks for joining us.